I want to talk a little bit about like how you help, because you're more than tax advice. You help a lot of entrepreneurs create wealth, and in a lot of ways. Should they have an S corp, a C corp, an LLC? How do you protect your business? What should you invest in, and all that stuff that you've helped me. And also, when you're a new entrepreneur, you sometimes make mistakes in the beginning, and then you come in and you clean up when they file late taxes or they make mistakes on taxes, they get audited, and so on.
It's like a farmer. A farmer never eats his seed corn because he's got to plant it in the spring to have a harvest in the fall. If he eats his seed corn, he's dead. And that's the way I look at permanent capital. You've got to have permanent capital so that you can grow and so that you can be in business.
They finally make it to where they build a business that's making, let's say, $10 million in revenue.
Yeah.
But now they owe $500,000 to the IRS. Or do you recommend them to get one of those IDL loans for $500,000 with a 1% interest rate, I think, and pay that when they're only going to pay 1% and get the IRS off your back? But what would you do in that situation?
There's something called a tax lien. A tax lien is sort of like the worst thing that can happen to somebody's credit, because once you have a tax lien, nobody will finance you. You can't get a mortgage, you can't get a car loan, you can't even finance a stick of gum because nobody wants to touch you.
Yeah. Hey guys, welcome back. I'm here with my friend, one of my newest friends and one of the coolest, nicest people I've met. You and your wife, you guys came over.
Yeah.
And really appreciate you guys, by the way. Thank you for helping me with everything with our taxes and our companies.
You bet.
And just want you to introduce yourself, Jon.
Yep.
Pleasure to have you, Jon Miller.
Hi, guys. I'm Jon Miller, and I run a company, Private Tax Solutions. I'm a CPA of about 30 years, and Albert was referred to me and one day just showed up at my door, and we started talking a few months ago, and it's been a great friendship between Albert and Sylvia and my wife and I. And check that out. We have your dog. Oh man, what a beautiful German Shepherd. I love it.
Can you please just take over there?
My dog's missing me at home.
This is quite an intro.
Shep.
Just call him over there and he'll walk in.
Let's go. Come on.
It's awesome. Janelle's good with dogs. She's over there loving him.
But just take him to Eve.
Now, but that's the first time that's ever happened to you, Albert.
It's the first time, so it's gonna be a good intro.
But you know, we're dog lovers, so we have a dog Piper at home, and it's dogs are fun.
So, question now that Chip interrupted us is: can Chip be a tax deduction?
I knew you were going to ask me if you could deduct Chip.
I mean,
probably not.
He's kind of interfering or being involved with this business podcast.
Yeah, I go to my vet's office and they have a dog, and it's a working dog. It's in their house or in their practice, but no, it'd be a little tough.
Well, we'll get into
but
all that.
Maybe
all that good
now
stuff.
that he's part of your business, I'll think about it.
Yeah, but think about it. But Jon, once again, sorry for that interruption. But you talk about your business and how you got it started into all the tax stuff.
You bet. So, I was with one of the big four accounting firms for a number of years and helped companies and wealthy individuals accomplish their goals. Not just tax goals. Tax should never drive what you do. It's just an important part of the decision. And so we'd help them achieve their financial goals, and tax is an important part of their decision. Ultimately, I ended up leaving as a director at one of the big four accounting firms and ran a few companies and enjoyed that, and then ultimately, decided I would run another accounting firm. And when we started Private Tax Solutions, it was really about bringing the best of tax planning that I had learned in the years working for PricewaterhouseCoopers, and bringing that to entrepreneurs, people who were building their businesses and who wanted to achieve success financially in their lives and have really good tax planning go along with what they're doing.
And now, Jon, before we get into this, I want to talk a little bit about like how you help, because you're more than tax advice. You help a lot of entrepreneurs create wealth, and in a lot of ways. How do should they have an S corp, a C corp, an LLC? How do you protect your business? What should you invest in, and all that stuff that you've helped me. And also, when you're a new entrepreneur, you sometimes make mistakes in the beginning, and then you come in and you clean up when they file late taxes or they make mistakes on taxes, they get audited and so on. But before we get into all that good stuff, like, how was your upbringing? Did you grow up like rich or poor, or what got you into like taxes? Because
that's a great question. Yeah, I wouldn't have guessed that I'd go into taxes. I grew up in the Air Force. My father was a military service individual. He was a non-commissioned officer. A lot of military families don't have a lot of extra money. It's sort of a challenge, especially if your father's not an officer. My father was a non-commissioned officer, so we had a large family and funds were tight, and my dad always kind of instilled in me this idea that I could be something more. I could go to college. I think he thought maybe I'd run a company or work on Wall Street someday. But also we talked a lot about maybe me going into the Air Force, and actually thought I'd go into the Air Force and fly. And I had actually an Air Force scholarship and really intended to do that in my life. But I took a break from college for a couple of years and thought about what I wanted to do. And I really just kind of moved in the direction of wanting to run a company and be an entrepreneur. And when I decided to come back and finish my education, part of getting my degree, I had a professor who was just an amazing individual. He, incredible character, very honest, very respectful, great mentor to me and to other students. He ultimately became the executive vice president of the university. So he was a very talented guy, but he'd worked at the Securities and Exchange Commission, had a really incredible career. He was my first mentor. There was another mentor at the university. He kind of started the whole fraud industry. And so being connected with individuals that were so impressive just took me in the direction of accounting. But I always intended to own my own company and to run businesses and to help people become entrepreneurs. So when I started Private Tax Solutions, I found it was easier to be a business coach and to help people grow their companies. And tax was just part of the discussion, as was finance. But like over the last couple of days, as you and Sylvia and Janelle and I have talked through your business, we've talked business processes, we've talked human resources, strategy, HR. I mean, just IT, I think we even talked about. Yeah. And so it's all part of running a successful business. But I will say this, I actually think being an entrepreneur starts with the right mindset. Because if you don't have the right mental attitude and mindset for your life and your business, and if you don't have that kind of discipline that's needed, it's probably better to have a job, because all of the systems and the tools and the resources that you need really start right up in your head.
Yeah.
And you can start a company on nothing. It's easier today to start a company on nothing than it ever has been. Most people think I got to go get a bank loan or get venture capital or private equity or something into my business. But when I started Private Tax Solutions, even though I could have started it with more, I intentionally started it with $100 so I could prove it could be done. And now we have tons of resources in our company, both in people and assets. And I think it's easier than ever, particularly with social media, Instagram and Facebook and LinkedIn. You can build a company from nothing.
And I know we talked about some, like a billionaire client that you had and wealthy people that you
Well,
helped.
I've had multiple billionaire clients over my career. Yeah.
So that's what attracted me to you. I'll be just, I want people to hear the transparency here. And I knew that you've done that. So I wanted to learn from somebody like you that has been through that, been through people like that have started companies. Now, do you only focus on people that have billion-dollar companies, $100 million companies, or do you also focus on people that are barely getting started?
I got started, so I feel like I have to pay back what was given to me, because, my father worked around airplanes, and And so he couldn't really give me what I needed from an entrepreneurial education. So I relied on mentors,
Yeah.
And so I feel like we have to give back too. Truthfully, there aren't enough billionaires in this world to have as clients. And it's hard to attract them for clients, candidly, until you start to build a reputation for yourself. But I'll tell you, everybody starts somewhere. All journeys start. And I guarantee it, the guys like Bill Gates and Roy Disney and Craig McCaw and Elon Musk, all those guys were broke, starving college students at one time, right?
Yeah, yeah.
They all had to get a start. They all had to persuade somebody. They all had to have an attitude of belief that they could do it. And let's face it, whoever helped them in the beginning, they're reaping the rewards of helping those people. And so I know that in my clients, there are some incredible people. And whether they become billionaires or not, I don't do this business just to make money and support my family. Let's face it, the relationships are just as important for me as it is to make a living and build a successful company. And I will say this too, billionaires and people worth hundreds of millions of dollars are as ordinary as you and I.
Mm-hmm.
Granted, you're a little extraordinary though, because I mean, a lot of them don't drive Ferraris, but I will say they're really ordinary people. There was once I was riding in first class between Los Angeles and San Francisco, and I was on the aisle. That's my favorite seat. And before I knew it, the Secretary of State wanted to sit down next to me, and we had a nice conversation. He's just a normal guy. And people with massive amounts of wealth, they have kids, they have problems with their kids, they go through divorces, they have challenges just like anybody else. And the cool thing is some of them are really neat people. And that's what I like about this business is you build these relationships. And some of these people will do anything for you. I have a very successful client, and every year she'll do something for our office, like she'll send us all to dinner or to lunch, or she'll send us a gift basket. And man, she'll be our client for life because we just care about her. And that's what I like about our clients, whether they're rich or poor. We're trying to attract a group of clients that we just like being around. We like hanging around them and doing things with them.
Talking about that, have you ever fired clients?
Yeah, sometimes that's an important part of the process, I think.
And I'll tell you why, because I know how it is with people like you, like people that give business counsel and help people with services like taxes, mortgages. Sometimes clients, the fees, they complain about fees, or they're unrealistic. They want you to do it now. Or they just, those complainers and people like that. And when you're the best, you're also not the most affordable out there, but you provide the best results. So when I grew up thinking like, I want to save here, save there. And I remember my parents, they made a lot of mistakes because they would go to places where they filed your taxes for free. And then I grew up like that, and then I would go to places where they would charge the least, and then they would promise you, oh, I could do all these write-offs, and I did that mistake. And one time I think I filed like 2 years in a row, and they put all these, they charged me, they gave me a great deal. They charged me $100 for tax returns, and then they said, I promise you, you're not gonna pay anything. I'm gonna write all this off in mortgage and real estate, and then they got audited.
And you got in trouble.
So what do you have to say to people that are, trying to find the cheapest place, but I understood the hard way that, you pay for what you get for, and
Sure.
What do you think of that?
Well, oddly enough, I've had my return prepared by somebody else one time in my life. And it was when I think I was a sophomore in college,
Yeah.
And I was actually running my own business at the time while I was in college. It was my first business gig. And I went to somebody and they didn't know what they were doing. It was like an H&R Block or some place. And they didn't know what they were doing. And it looked like I was going to owe a lot of money. And I just didn't feel right, like something was wrong.
Yeah.
So I went and found a certified public accountant. And I'm a CPA, but there are all kinds of CPAs too. And I'm sure there's probably some good people working in some of the cheap places to get your tax returns done. I don't want to name names, but I found this CPA, and he goes, well, actually, you have a business. And then he walked me through, and he taught me. And as it turns out, I owed quite a bit less money as a result of using a professional. And I feel the same way about, fixing my car or getting work done on my house or getting a contractor to remodel something in our offices. We've had really good experience with some vendors and some we haven't.
Mm-hmm.
And I think what makes a good vendor, whether it's a tax professional, an attorney, or a surgeon, is there somebody that recommends them?
Yeah.
Do people seem to have good experiences with them? Do they seem to have the knowledge that's needed? How do you feel when you work with them? I mean, I tell people you'd never hire a surgeon by looking on YouTube or looking on, say, Google, and finding out who the surgeon is, and then calling around and saying, well, will you do my heart surgery for less? This guy will do it for $5,000. Will you do it for $2,000? Candidly, I don't want the cheapest anymore.
Yeah.
I want somebody that's going to do the right job and do it well. And you asked me about firing clients. Some people in this world have a lot of issues going on in their life, and they're just abrasive, mean people.
Yeah.
And it's hard enough to find good people. That.
Yeah. Yeah.
When you attract a good group of employees, and we have a fantastic group of employees. I can't say enough about the employees that work for my company. But when you have somebody that's just always angry, always in stress, I get that people get into stress because, being in business, you have difficult moments, you have stressful times. But if somebody's always approaching you from a state of reaction, and then they complain about a small bill, maybe that's not the best client for us. So I kind of start observing if I see a pattern, then I say, I think we're just not the best fit for you.
Yeah.
And that's okay, because maybe there is somebody that can help them through that experience a little better. Candidly, my employees are booking my schedule out to August and September right now. So the luxury I have is we actually turn away clients just because they need somebody sooner.
Yeah.
We're going to try and accommodate them as quickly as possible. We want to help good people, and we want to bring good clients into our business. But, one bad apple can really make a bad day, can really turn your staff off and make them have a bad day. And I want our environment to be positive, appreciative. I try and show lots of gratitude to my employees, do things like take them to lunch or do something nice for them. I don't need somebody that's always in a reactive state. That's just not a good client for us. We had a client once that we knew they were having tremendous financial challenges, and we had done way more work than what we billed them for. And we sent them a small bill, and they called and ripped us to shreds. And I just said, we're probably not the best guys for you. Whereas other people, sometimes you do good work for them, you send a big bill, and you go, well, I wonder how that's going to be received. And they love you more, And so I don't think it's about whether you charge a lot or not, or fees. I really think it's what kind of a place is the person coming from. Yeah. I get that some people are in stress. My goal is to get them out of stress and working on their business. I'd say in my business, a lot of times maybe a counseling degree would have worked better than an accounting or a finance degree. But I say that people attach emotion to money.
Yeah.
And my job is to detach those two from each other. And the most common emotion that they attach to money is fear. And when you're in fear, you make bad decisions. You act out and you react in ways that aren't helpful to you. But if I can take away the fear and give them confidence that we know what we're doing, we know how to help them through their financial or tax challenge or whatever it is, and get them moving in the right direction, then they actually do amazing things. They solve the problems. In fact, when we get them in a good place, sometimes it takes a year or two, but I see amazing things happen in their life. Their business grows. I've seen people get married, have children, bring on people that just totally change their life and their business. All kinds of good things happen when we get them out of a reactive state. But people have a lot of fear when it comes to money.
Yeah.
It's a common emotion.
Now, Jon, when you think it's better for like for the new entrepreneurs that are watching this, that they're getting started, or they have an idea to start a business, or they partner up to open a business, or they partner up with somebody with the business. In the beginning stage, how often do you see businesses bleeding because they're making money, but more money is going out, and they're just fighting to stay alive? Is that normal, or
it's pretty normal. I would say, I'll bet 90% of the small businesses in the United States, and by small, I look at anything under, say, 25 million in revenue a year is small. And that may sound like a lot to some people, but small businesses come in all flavor, $100,000 a year in sales on up to, sometimes I think even the SBA classifies it as up to maybe 50 million. I don't know. But what I notice oftentimes is two things. Most businesses are undercapitalized, meaning they spend everything they make, and most of the time the owners are in debt. My goal is to change that scenario where debt is no longer used to finance your business. You build cash reserves. You become your own bank in a sense. And so if you need a credit line, my goal is to get rid of the credit line, and you are the credit line as the business owner. And your balance sheet is so healthy that you're like me. I have the bank come in. I have multiple banks come in, and they beg me to take credit cards. They beg me to take a line of credit. And I go, guys, I just don't need it. I don't want it. I don't care about it. I don't want to be to their debt when the economy shifts, because economy shifts. All economies shift. And so when that happens, I want my clients, for their businesses to be really healthy, to have healthy cash flow, to have healthy cash reserves. But I would say most businesses aren't that way. Entrepreneurs are traditionally, they're building their business and building it, and so they're sucking every dollar out because they're going without, they're tight on finances. My goal really is for them to start forecasting their cash flow, focusing on their processes, building a sales pipeline, building a marketing machine so that it's generating sufficient leads for the business.
Why do you think businesses are like that, so tight and bleeding in the beginning stage, or is it even, do you see them even beyond 10 years? And
I think it's just because the owners, they don't have the discipline of saying, okay, the cash of the business needs to be considered an asset of the business, not my asset. So I have a lot of money in my business, but I consider it to be the business's asset first. Now, if I need money in my life, I pay myself a salary out of the company, and then with some regularity, I'll take out distributions or dividends out of the company to support other aspects. So maybe savings or whatever. I also try to, model good behavior in that not only is my company building cash reserves, but I am too. And so, but companies are taking money out because the owner looks at the company and he goes, hey, I got 200,000 there. I'm going to yank it all out and leave the company with 10. I also had a partner once, a business partner, who he didn't have good financial sense, and he'd get a lot of money in maybe 1 week, and then he'd go buy a $150,000 photocopier. And I'd say, what are you thinking? We got payroll on Friday. So, it's tough because you have to build the mindset of stewardship. And stewardship means I have to treat the company as a business, and I have to make sure it has sufficient capital, assets, people, and good processes so that it runs without me.
How much reserves do you think you should have if you're a business owner?
So what I challenge business owners to do right out of the gate when I meet them, when they start working with me, is to get 4 months of cash flow in the bank. And that's to cover all of your expenses. So whatever that is, if your monthly burn is $30,000 a month, that means I want you to have a goal of $120,000 in the bank. I don't care if it's in a money market or in a savings account. I just want it in the bank. Because here's what happens. If you don't have the money and you've got to make, and this happens to every entrepreneur, you got to make payroll on Friday and you don't have the money, where do you take it from? Amex, Visa, MasterCard, or your line of credit. My former partner always was $200,000 into his line of credit, always. And I couldn't get it. And there are people that are always going to be in debt. I want to build the saver mindset and the asset builder mindset. So, just like you build cash so that you can buy properties in monopoly, that's a great scenario. Think of it as building assets in this business. But I think it just is about discipline.
And by all expenses, 4 months, or do you mean all employees?
That's to start. All employees, if you
Office.
have commission, like you have commission sales reps, and that's 100% commission, then maybe we might exclude it. But I'm going to set a lofty goal for people. I'm going to say, I want you to get, we set goals, right?
Yeah.
In the last 2 days. I won't say what the goals are.
Some pretty big ones.
Big ones, right?
One of them was a jet.
Yeah, we are working on getting you a jet, Albert. But in terms of cash, they were big goals.
Yeah.
And we looked at every one of your companies and we set a target for cash.
Yeah.
And what did they say about that goal? Would that change?
Well, one of the things that you said also was as a business owner that you're running a company, especially when there's a lot of revenue coming in, commission, sales.
Yeah.
One day of the week, you could have millions and millions of dollars in the bank, and then another day of the month where you pay everything, it could drop by a significant amount. So I was asking you
to negative.
So I was asking you, like, well, what do you mean by 4 months?
Permanent. It's permanent capital.
And you're talking about your equity, which means after you pay everything and you don't know anything, that's your equity. And if you have loans or anything else, then that goes off your equity. So what's your net equity, right?
Yeah, I
Times
really
4.
want people to have 4 months of solid
Net.
cash net. Yeah.
Your money, not everybody, not somebody else's
Right.
money.
Not that you owe. It's really sitting in your business. It's sitting in dry powder for you to use in case of an emergency. What I find is that if you run into a bad month or a bad season, like a recession,
Yeah.
we've had a few of those in our life, all of us have, that you can make changes in your business and make that capital work. You can probably stretch it out to a year. And that's my next goal, is for people to have a year's worth of capital sitting in their balance sheet. And what does that do for you? Well, for example, we own a commercial building as a business.
Yeah.
And I go into my bank and I said, I want to refi the commercial loan. They don't even ask questions. They get my balance sheet and they go, approved. They approved it literally overnight. Because they look at that balance sheet and they go, this guy knows what he's doing. He's a real business. He's got cash, he's got assets, he's got cash flow. We can see that from the income statement. You become a very bankable business. Now, I don't like loans, but there are certain things where you have to get business loans. And one of them is, in my business, I wanted a commercial building to put our people into. And I'm a real estate investor too, which we talk about a lot about real estate investing.
Yeah.
Two of us.
Is that the building where I went?
Yeah, that's a building I own, one of them. And so I bought the building. I didn't even negotiate because it's such a great price.
Yeah.
We found out what he wanted. I said, make the offer. And we bought it. Now it's worth almost double what I paid for it. And we've remodeled it a little bit. We're going to repaint it. And we're actually almost out of the building now. But I could sell it, and now I could go get another building. And I think a building is a thing that you borrow money on because it's a long-term asset. But on short-term assets and on short-term operations, that's not the kind of thing you need to be borrowing money for. And when I say permanent capital, I want to go back to this concept. My wife will tell you there are times when if we were going to dip below the permanent capital, I don't take a salary because that motivates me.
So no
It
Hawaii
holds
trip.
me accountable. What's that?
What if it's a Hawaii trip month?
You know about my Hawaii trip. So Albert knows that I like to go to Maui every year for 10 days. And if it's my Hawaii trip month, then I got to take the money out of my own savings, but I'm not taking it out of the company. It's like a farmer. A farmer never eats his seed corn because he's got to plant it in the spring to have a harvest in the fall. If he eats his seed corn, he's dead. And that's the way I look at permanent capital. You got to have permanent capital so that you can grow and so that you can be in business tomorrow.
Now, John, what happens if somebody starts a business and they're struggling first 5 years, almost going out of business?
That's everybody.
And let's say they finally make it to where they build a business that's making, let's say, $10 million in revenue.
Yeah.
But now they owe $500,000 to the IRS. Or do you recommend them to get one of those IDL loans for $500,000 with a 1% interest rate, I think, and pay that when they're only going to pay 1% and get the IRS off your back? or what would you do in that situation?
So every situation's a little different. The cool thing about our practice is, out of necessity, because we had some really, really bad recessions, like 2008, 9, 10.
Yeah.
Horrible recession. And there were a lot of very successful companies that either went out of business, their owners went bankrupt. And some of these recessions required me to go, what do you do when somebody owes $1 million in taxes to the IRS? These are just realities. They would come to me for our expertise because we had developed this expertise. We know how to work with the IRS in those situations. I would say there are situations where borrowing the money to keep the IRS away is a good situation. We also can set up usually a 72-month full pay installment agreement. There are actually some situations where we can do a business offer and compromise, which is a really interesting thing, and very, very few accountants have ever done them, but I've done them. And
how does that work?
Well, it's usually for businesses that have very little assets and the income is probably just covering the expenses. And in those situations, sometimes we can create a negotiated settlement amount. They're rare, but they're possible. And usually if it's in the case of an individual that owes money, because a lot of times it's not just the business that owes money, oftentimes it's the business owes money because they haven't paid payroll taxes too. And then what happens is you create a trust fund liability, and that gets assessed or assigned over to the owner or the responsible party. And when that happens, we have to get the owner out of trouble too, not just the business. And so in that case, we have to sometimes do an offer and compromise for the owner. And the challenge you have is, again, it's an income and assets determination. So if you have a lot of income or if you have much in the way of assets, the offer and compromise route probably isn't the right route. But there is a route of installment agreement, partial payment installment agreement, where maybe you don't pay it off fully, but you pay off a large portion. There's even a situation called currently not collectible. There's all kinds of tools, and even bankruptcy, but I don't like bankruptcy. Bankruptcy destroys credit, and usually if somebody qualifies for bankruptcy, there's some other tax things that we can do. But there are all of these solutions that we can use to solve the problem. It just so happens that people that have assets or a lot of income, much income, most of the time we're going to be negotiating an installment payment agreement with the IRS of some sort. That's just paying it. There's also another problem in that there's something called a tax lien. A tax lien is sort of like the worst thing that can happen to somebody's credit, because once you have a tax lien, nobody will finance you. You can't get a mortgage, you can't get a car loan, you can't even finance a stick of gum because nobody wants to touch you.
Yeah.
And because they look at that and they go, well, if I give you a home mortgage, the IRS is in first position. My mortgage isn't even secured as a lender, so I'm not going to give you a home loan. And that's what happens. So we also do that. We try to prevent the tax lien filing. The IRS misunderstands oftentimes the rules, because most of the employees that I've worked with think that if you owe over a certain amount, they have to file a tax lien. And I tell them, no, that's not what the policy says. The policy says you have to make a tax lien filing determination. That's a determination whether to file or not. You're not, in all cases, required to file the tax lien. So if I can persuade them that they only have to make a determination, and sometimes it's in the best interest, that's a key word, best interest of the IRS not to file a tax lien, then we don't get the tax lien filed. And that's a great situation, because we create a payment mechanism for the IRS, so it solves the financial obligation, but we save the credit of the business owner by preventing the tax lien.
Jon, what's a payment plan with the IRS? How does that work? Like, what's the interest rate and payments?
Well, the interest rate fluctuates a little bit. Over the last couple of years, it's kind of fluctuated between 3 and 4% a year. The other challenge you have, though, is running along with the interest rate is you have oftentimes a failure to pay and a failure to file penalty. And the maximum penalty accrual runs about 50%. So if somebody owed $100,000 in taxes, chances are if it's gone on for a couple of years, they now owe $150,000 in taxes. And then that interest just stacks on and starts accruing. So sometimes by the time they get to me, they can owe double what they would have originally owed, or 1.5 times what they originally owed. It just kind of depends on the timing. So that's why, even though the interest rate might be low, with penalty accruals, that implied factor of borrowing from them might make it unusually high. So that's why it might be better to use a loan and get it solved. It's all dependent on the person.
Yeah.
But of course, if they've already got the tax lien filed, nobody's going to lend them the money, or sometimes they got bad credit, so nobody's going to give. So sometimes we have no choice but to use the IRS as our borrower.
Yeah. And also what I noticed has helped me, especially because of some years that I needed to go back and clean up with your help. When you communicate with them, they tend to help you. But
Who, the IRS?
Yeah. But when you don't communicate,
that's a unique perspective you have, Albert. That would not be my perspective.
As opposed to ignore, I'm speaking as opposed to ignoring them.
Yeah. Oh, yeah. You can't ignore. So some people think, well, the problem will just go away if I don't.
Yeah.
They'll get certified mail. It looks really scary, and they put it in a drawer.
Yeah.
They set it aside, and they hope the problem will go away. Unfortunately, the IRS has policies where they can go to your business if you own a business. They can go to your home. They come with a badge and a card, and if you're not there, they say, call me, and they start doing some really ugly stuff. Worst case is they levy you. And most people would think of that word as like a garnishment. And what a levy is, you'll just wake up one day and your whole bank account will be drained. And that's an ugly scenario. So, you definitely don't want to avoid them. You want to talk to a real tax professional. There are not a lot of people that know how to solve the hard problems.
Yeah.
And you want to make sure that the right things are happening.
Yeah. Well, one of the main reasons, John, that I have you here is because we have a lot of our main audience are millennials, and I know how millennials think. They want to be entrepreneurs. A lot of people now, everybody's an entrepreneur nowadays, and
I think it's a great thing that's happening. As our country's becoming more entrepreneurial, and more millennials are really, taking the risk and saying, you know what, I'd rather try this on my own. I think it's fantastic. We need to do more education to help people get into business.
So when these people are thinking about starting a business or they just started it, do you think it's very important to hire somebody like you that is an expert in taxes that could help them, guide them in their business? Because there's tax people that just know taxes, and then what I like about you is that you know taxes and business. You're like an entrepreneur yourself.
I am an entrepreneur. Yep.
So how important is it to hire, like for example for me, like we talked about this, and I think this is a good example for people watching this. Like one time you were telling me, man, Albert, I wished I would have found you 3 years ago. You would have found me 3 years ago, and I would have set you up in a better way. And then I told you, well, yeah, but you know what? Maybe if I would have been more conservative, I wouldn't have been crazy to put everything on the line and risk going out of business every other week and make it to where we made it today. But what's your philosophy with being proactive and careful to taking risks to grow the business?
Well, all entrepreneurs have a mindset of risk. They take a risk. They believe in themselves. It's just part of the process. You have to be a little bit crazy sometimes. And I call that the art of business. And the art of business really is believing in yourself, being disciplined, making it happen day in and day out. You can't really teach that. You can coach it a little bit. You kind of have to go through the experience yourself.
Yeah.
It's like I told my son said, what would you do if you lost everything? How long would it take you to get it back? And I said, now 1 year. But that's a 10-year education to get to that stage, to understand what it takes. Then there's the science of business. That's, what's a balance sheet? What's an income statement? How do I plan for taxes? That's all the stuff you hire other people to do. Your job as an entrepreneur is to do what you do well, your highest and best value. That's what we talked about yesterday.
Yeah.
For you, it was 4 things.
Yeah.
And you're phenomenal at those 4 things. And that's what you should do. And everything else, as quickly as possible, you should delegate. So for me, when I hired my first employee, it was tough because I was like, oh man, this is food from my own table.
Yeah.
The first employee I find is the hardest, and because it's your money, it's taking away from you. But what I did is I said, okay, what don't I want to do? What's stopping me from doing the things that are really important?
Yeah.
And that was the person I hired, and they did that. And then I hired somebody else to do things that I didn't want to do or didn't do well. And I just kept doing it until I got closer and closer to what I do really well. And I think it makes sense, if you can, to hire good, competent people as soon as you can, even if they're only part-time or they're doing a gig, like maybe you found them through Fiverr.com or they're a virtual assistant. As soon as you can, to have somebody else do the $15, $20 an hour work so that you can do the $300, $400, or $500 an hour work or $5,000 an hour work. I tell people, you don't know what you're worth.
Yeah.
You really don't. You and I talked about, you and I know people and have billed people huge amounts of money per hour for the value we deliver. And the more your reputation grows, the more your mindset and your confidence grows, and the more you understand your value, the more you'll be able to communicate it, and people will pay for it.
Yeah. What do you think keeps people from hiring help, hiring employees, hiring assistants to start?
It's the same thing with money. It's fear. It's fear. It's fear of loss.
How do we convince people to get over that?
Well, years ago, I had a technology company. I had all these incredible employees working for me, and it failed because we got hit with the September 11th disaster.
Yeah.
I was a really young CEO. And September 11th killed a lot of companies, even Fortune 500 companies. Some of them went completely away, but it shook my confidence. What I should have done was I should have hired a coach and got right back on the saddle of the horse. I think sometimes you have to surround yourself with mentors and people that get your head straight again, that get your belief system up at a high level again, that get you out there doing it again. Because I guarantee you, as an entrepreneur, you know this, you and I both failed at things in our life.
Yeah.
And failure doesn't have to define you. And the reality is, show me somebody that succeeded at everything in their life. I don't believe it. I know billionaires who have failed massively. I know a lot of people that have failed. And success is just a process of failing over and over again until you figure it out.
Yeah.
But the thing you can't fail on is what you believe in, your mindset. You cannot fail yourself there, because you've got to believe in yourself. And if you don't believe in yourself, go find somebody that does. Yeah. And sit around that person and hang out with them until your mindset changes and you believe in you.
Yeah. So one of the things I'm gonna do is we're gonna go to have dinner with our friend Rob Luna in a bit, and
to my favorite restaurant in Beverly Hills.
Yeah, don't say the name because we're gonna have we're gonna be bombarded by people. But talking about the fun stuff now, deductions. Yeah. So we're gonna go to this nice fancy restaurant, and it's gonna be a write-off because we're gonna talk business.
We are talking business. Yep.
So, and I know this
year you get 100% write-off for meals, whereas last year it was 50.
So can I take my wife to dinner every day to fancy restaurants and bring another business partner?
Every day gets a little difficult, but if there's a business purpose behind it,
there is.
If there's a complete business purpose, My wife isn't as involved in my business. She works in an ophthalmology practice. She loves eyes and does a great job with people, but she does own our businesses. So she's a 50-50 partner, not just in owning our businesses, but in our life and in the things we do with our family. Yeah. And so if we just go to dinner and we don't talk business, we don't deduct it. But sometimes I'm walking through what's going on in the business because she's like my coach and my cheerleader. Yeah. And I'm telling her what I think we need to do, and I'm bouncing ideas off of her. And I write that down on the receipt, discussed, this HR issue, or discussed how we're investing in a new building or this asset, and Jon Miller and Jon Miller.
So if I go to dinner with Sil, just us alone, that's a business expense.
Well, she's involved in your business, and as long as you're talking about business,
we talk about
business purpose, then that's a situation that'll win.
And then what if, let's say Rob today wants his margarita that he likes, is that also a write-off if it's included in dinner?
So what we should really talk about is, and we talked about this earlier, is the IRS has a standard. It's actually embedded in the Internal Revenue Code. It's called ordinary and necessary. Yeah. So as long as it's ordinary and necessary, sure, we can and the IRS hasn't disallowed it, we can claim that as a deduction. Sometimes things get a little crazy, you know, like clothing. Clothing's a hard one to deduct, you know, and there are a lot of people that spend a lot of money on clothes, but clothes are a hard thing to deduct. There's a lot of court cases out there on clothing. Entertainment's been disallowed now. It used to be you could deduct 50%. So I take clients to baseball games. And my favorite team's in this town, the Dodgers. But you can't do it anymore. It doesn't mean you can't pay for it out the business. It's just not going to be deductible.
Wow.
You'd still pay for it from the business. It's just not going to be deductible. And so now all that's going to do is just raise your effective tax rate. I would say, though, don't let taxes drive you. If the best way to treat your client is to entertain them by playing around a golf or going to the Dodger game or going to the Lakers or wherever, do it. Just recognize it's not going to be deductible. Yeah.
Yeah. So,
but ordinary and necessary is kind of the standard.
One of the best, one of my biggest takeaways these last 2 days that we had were about not dictate your life and business by taxes.
Right. Taxes is part of the decision.
To like dictate on what your real vision is for your business and what really makes you happy and your purpose in life. And then taxes are going to be there.
Yeah, and I'll give you a great example. You and I know, because we've done some of these boot camps and workshops with entrepreneurs, you know. We did your boot camp in January. And, you know, what do we have, 500 people there?
Yeah, more or less.
And I can't tell you how many conversations I had with people that say, I want out of California, right?
Yeah.
Everybody, I want out of California. Highest tax rate in the nation. The longest statutory period for collections. I can't tell you enough how bad the California tax situation is. It's terrible. I want to talk to Governor Newsom and say, you need to change these things. Unfortunately, California has an appetite for taxes. They think that's a good thing. And yet, when they leave their house, they shut off their lights to save pennies. And yet, how many people will not try to do a little tax planning to save thousands of dollars on taxes, yet they'll shut their lights off to save a few pennies on their electric bill?
Yeah.
It's much easier to save money on taxes and leave your lights all on, okay? And yet it's California that has this appetite, so everybody wants to leave California. I used to live in California, and I travel back here from time to time for meetings. I love California, you know. I love going to San Clemente State Beach and swimming.
Yeah.
I love driving to Half Moon Bay from San Francisco Airport. You know, there are things about California I love, but I don't have family here anymore.
Yeah.
And some people have family here. So is it the best idea to let your tax situation drive your life? I just don't believe that's true.
Yeah.
You know, Roy Disney, interesting guy. He died the year that they lifted the estate tax exemption. Now, I don't know if that was by design.
Yeah.
But it sure looked funny when he died that year, you know. But I'm saying you don't have to let everything be driven by what you want to accomplish in taxes. Yeah. It's just a good idea to have it in the background and have that part of the decision. Yeah. My wife and I have thought about maybe selling our house and getting a different house. And we'd get $500,000 of the gain excluded. You know, we'd probably move to another big house. We have a beautiful house, but as we've talked about it, we think, oh, we love our house. You know, it's huge. It's custom built. It has a stone fireplace, stone exterior, vaulted ceilings, crown molding.
Yeah.
I get this $500,000 exclusion, and then I get a higher basis on a new house I buy. But at the end of the day, my wife loves the house.
Yeah, yeah.
We love the house.
Yeah. Yeah.
So I think we're staying. Same with California. If you love California and your family's here, maybe that's not the best decision.
And my wife loves
But if you're not tied to it and you think that's a good tax strategy and you want to move to Florida that has no state income tax,
and white
that
sand
could
beaches.
be a good strategy.
White sand beaches. And then see over there, my eyes don't get so dry and my allergies are not
well,
that bad.
Well, you're going to deal with humidity and mosquitoes in Florida, though, too.
Yeah, I get mosquito bites. But then your wife said she could help me with my eyes.
She can. Yeah, she's a big dry eye person. Yeah. She knows how to help.
Because you told me those kind of things are not you can't expense them, right?
Medical's a tough one, but if we have a C corporation, There's a way to do a medical expense reimbursement plan sometimes. The only thing is, if you have employees,
Yeah.
you have to allow them all to participate in that. But
But
there's
that won't cover something like Syl's nose, right? Because that was pricey.
Cosmetic is a little more difficult.
Even if she uses it for marketing.
We're going to get in trouble if we keep talking about this because Syl's going to kill me over dinner. So I think I better pass.
Yeah. Well, a couple more things before we wrap it up, because I know we have somewhere to go, John. But another key takeaway, which you guys are watching this, John's going to be at Driven 5, and he's going to be sharing all his knowledge with all of you. And I know all you entrepreneurs have different types of industries. John helps everybody. You help many industries in different states, right?
Yeah.
All over the
Yeah,
US.
our best, kind of our knitting where we like to focus is we do a ton of real estate investment. We do a ton of services-based businesses. We do have businesses that have inventory, like maybe you sell hot tubs or windows or whatever, but that's not our common. Our niche really is service businesses, high net worth families and individuals, and real estate, all kinds of real estate. We love real estate.
Yeah.
And by the way, I believe in real estate because it's the one thing that I've seen create massive wealth for people.
And today, like my takeaway that I was going to talk about is you made me today seriously, like I don't know how many millions of dollars by showing me the processes and just opening my eyes to like how many processes we have, who to assign them to, and then you gave me those 4 that you see I'm really good at, and I started. I couldn't sleep yesterday. I was thinking about all those processes. But is that something you think you could put together for everybody watching this?
I'd love to do it
because that was valuable
for our group, and I think it's part of what I do with new businesses. I sit down and we look at their business and we say, what is different about you?
Talk a little bit about processes, like so people can know what I mean.
So processes are what drive value in your business. They're the things that run your business when you don't. I talk with my entrepreneurs about being self-employed or a business owner. Self-employed means you're in business by yourself. You run it, and if you get sick, you break your leg or hip, or something happens to knock you out, the income's going to end. But if you're a business owner, you have people and processes running that business. And it's going to not only continue to function as a business, but hopefully grow in your absence. And so when we look at the business, we look at all of the major processes of that business. Great book, Michael Gerber, E-Myth. A lot of us have read it. But this is the actual application, how you do it. So what is your unique set and mix of processes? And then we prioritize them. And for you guys, I think there were, what were there, Janelle? 18 or so processes.
A bit more, I think.
Yeah, it was about 18. I generally find most businesses have about 16 to 22 major processes. We have 18 in ours. And what we realized from our experiences, one of our processes is tax return preparation. It's boring. It doesn't show value because people can go get a tax return from H&R Block or anybody down the street. But one of our most vital and important processes is tax planning. And tax planning has tremendous value and really distinguishes us from other companies. And so it doesn't mean we don't focus on the process of tax preparation. It just means we have greater focus on the value driver in our business, which one of them is tax planning. Another is business advisory, like what we've talked about. For you guys, it was amazing because...
Or a couple that you liked from us.
I will tell you. So, if you look at companies, like one of your companies is the Mortgage Guys.
Yeah.
Right? And you look at other mortgage companies, successful ones, Rocket Loans, Quicken Loans, and you say, what are their most valuable and visible processes? They're completely different from your company. So you want me to tell them some of the more interesting ones?
And maybe a couple, not to give too much.
I don't want to give too much. There was one that was so unique, I've never seen it in any company. It's my favorite one, and I'm not even going to tell you what it is because I think it's so secretive,
Yeah.
so
We'll say another
so
one then.
compelling. What? You don't want? You want me to tell him? I don't want to tell him.
Maybe. Okay, don't.
It
I
relates.
trust you.
It relates to how Albert does things and how he interacts with people. That's about as much as I want to say. But it's so compelling that I told Albert, you and Sylvia, you do this so well. And we had your, top financial person in the room, and she validated that. Other people validated it. It took us about 5 hours to get to that place. But when we nailed it down, these 4 were just beautiful. And we said, don't be Rocket Loans. Don't be Quicken Loans. Be TMG, the mortgage guys.
Yeah.
And these 4 things, nobody knows how to do like you guys do. Mm-hmm. And when you're improving those processes and everybody's saying, what are they doing? What are they doing? They're going to say, okay, we're going to do this just like Albert and Sylvia.
Yeah.
And you're going to be 6 months, a year ahead of them because that was yesterday. These processes take time to build value. And so I actually don't want to tell them what the 4 are because that's going to be your core focus. And that's really what you're delivering to the market that just brings incredible value into your business.
Yeah.
You do those 4 and the rest of the 14 to 16 processes, we're going to delegate to other people. Somebody in your company is going to own that.
Yeah.
And that gets you such a tight focus on what drives value in your business. I think your business is about to explode, as if it hasn't, because your goal has been to at least double every year, right?
Yeah, yeah.
And I think it's going to grow many times faster now.
You told me maybe triple or quadruple.
Well, I believe it's going to grow faster because you've gotten a tighter focus on things. You're going to increase the balance sheet presentation. We're going to build these cash reserves and the assets.
Yeah.
You're going to build processes or delegate them for somebody else to build.
And
it's going to drive so much value.
And we talked about luxury watches, Ferraris, and that kind of stuff. But I think we'll leave that for the Driven event. I do want to squeeze in 2 more things because I know we're almost out of time, John. But you mentioned one of my Ferraris that I like. How do I use it for work? Mm-hmm. What percentage do you use your Ferrari for work? And then I told you, well, I drive it from home to the office. And then you said, well, that's not a write-off. And then you mentioned, and then you said, and I said, well, I asked you, well, how do I do it? John, help me. And then you asked me, well, do you have a home office? And how does that work? Why do you need a home office?
So there were a number of ways to solve the problem. I'm not saying it's a perfect solution, but for some people, they have the office downtown. I own a commercial office building. I actually have a home office. The home office has to be used exclusively for business, so we can't have kids' toys in there and personal bills and do personal stuff. It has to be for your business. And then, what I tell people is, go to your home office first in the morning. And trips between offices, that counts as a business use. You're going from one office to another. That works. Obviously, drives out to your clients, that kind of stuff, that also works. We're also talking about maybe we put the, certain luxury cars in a car rental business, Now you're in the luxury car business. We have to go back again to this ordinary and necessary. What's ordinary and necessary? Yeah. And then build the right story around it and make sure that the business use percentage is business use, and whatever that is the portion that's
Isn't this so cool, guys? Luxury car rental. I'm liking it. We have a lot more to talk about.
I have a client that's in the snowmobile business. He loves the snowmobile.
Yeah,
that's his life.
Yeah,
and he buys snowmobiles and he takes people out on snowmobiles. He's built his whole life around snowmobiling, and in that way he can buy snowmobiles and use them. But, you contrast that with the dentist. I know there are dentists that have razors and four-wheelers and snowmobiles. My question is, how do you deduct those?
Yeah.
What's the business purpose? How do you do that? Well, my client solved it by saying, you know what? I love snowmobiles so much, I'm going into the snowmobile business.
One final thing, John. Bonus depreciation. I know you could do it with a 6,000-pound SUV. Mm-hmm. You could also do it with a private jet. So how does it work really quickly on bonus depreciation?
That's a great question. I haven't ever thought about it in the context of a jet. I'm going to have to go back and look. But bonus depreciation looks like this. Congress decides what qualifies for bonus. And
Yeah.
so some years they've given us 50% of the asset cost. So if you went and bought a big piece of equipment, a factory or a photocopier or a car, you might get 50 to 100% bonus depreciation. That means you recover that whole cost that year, even if you finance the asset. So if you go out and get a bank loan, you can deduct it all. Remember, though, we deal not only with federal tax laws, we also deal with state laws. So some states don't allow bonus depreciation, but they might allow something called Section 179 depreciation. So we have to not only look at the federal level, we look at the state level too, particularly when it's California.
So you could write off the entire amount and then go ahead and finance it 100%.
Yeah, now remember, you got to have the cash flow after it to pay off the debt. But yeah, you could, absolutely. And typically, as you're incurring the income to pay off the debt, that's going to be taxed, right? And you're not going to have that offsetting deduction because you took that deduction early on when you bought it. So sometimes there's a little bit of a timing issue there.
And then, John, S Corp or C Corp?
Oh, man. Well, S Corp, C Corp,
or
LLC that elects one of those, a trust. There are all kinds of entity choices. And we actually talk about with our business owners and our families, it makes sense to use every single type of entity. I'm not saying go out and collect entities. We have group therapy for that, guys. But what I am telling you is there's a business and a tax reason for every type of entity. For example, real estate, rental real estate, we don't typically put inside of an S corporation. Sadly enough, I've seen some tax professionals do that with rentals, and it's disastrous.
Yeah.
There's a lot of bad tax stuff happening. So we stick them in LLCs, and they're either what we call a disregarded entity or it's a partnership. A C corporation, very valuable tool, oftentimes used for companies that are going public or public, also used for companies where you want to take advantage of employee benefits and fringe benefits for the owners. Because S Corps have limitations on fringe benefits like health insurance and things. There is a way to deduct health insurance for S Corps, but it's kind of a workaround. And then S corporations we love. That's a huge part of our practice. And we only use S corporations really for active or business type of income. Once it becomes passive, like dividends, rents from rental property, interest, once we start to see a lot of passive income, all of that passive income, we want to be in an LLC that's either, again, a partnership or a disregarded entity for tax purposes for an individual, because we preserve some tax attributes and we avoid some bad things that happen in a corporation. So, and I could talk about trust too, but the reality is there is a business case and a tax case for every single type of entity there. It just depends on your facts and circumstances.
Yeah.
What are you trying to accomplish and why? And what is the income source and what's the goal here?
Yeah.
In fact, on a C corporation, you and I didn't talk about this, but there's a really cool tax benefit for a C corporation. And it's a small business stock exemption. It allows you to avoid the capital gain on a small business stock sale. And it's a lot of money.
Yeah.
So we love C Corps for certain types of reasons too.
Well, John, thank you so much. I look forward to having you at Driven 5 and sharing a lot more. I know we can't get so much in 1 hour, but thank you so much. And I know that you're kind of relatively new to social media and all that, so I want to help you out with Instagram. I know you're at Jon Miller CPA, so follow him. We'll put your information below. But is there any other platform that you like to get?
Well, we do. I've been on Facebook for a long time, but we do Facebook, we do LinkedIn stuff, we do. We did do a big push into Instagram about a year ago, maybe 2. And now we're really getting back into our Instagram marketing. But I would say those are the big 3. We do a fair amount on LinkedIn, Facebook, and Instagram. Actually, I should say I actually believe YouTube's going to be one of the top, social media platforms. Yeah. Especially for professionals like you, experts. Yeah. Because you're really selling trust. And people want to get something from you and feel you. So I think video is really a very compelling marketing piece. Yeah. So I'm a huge believer in what's going to happen with YouTube. Yeah. And in fact, what they tell me, all my clients like you, they're just marketing professionals, is YouTube's become the largest search engine on the planet.
Yeah.
Bigger than Google, and Google owns it. So it's kind of cool.
Yeah. Well, Jon, thank you so much. Really appreciate you, and look
Thanks.
forward to
yeah.
seeing you at Driven.
Yep. Thank you.